Good morning, good morning, good morning. It is me, Ryan. I am back in Blighty. I seem to have picked up some kind of bug or cold or something from the plane. Everyone was coughing and spluttering, and I feel like shit this morning. But I crack on because I am a warrior of a man. I'm still not home in my own house yet. Unfortunately, I decided to stay up in London last night because I could not be bothered to travel the extra few hours. So I'm feeling a little bit aggrieved that I've now got to travel back to Kent today. But enough about me. How is everyone? Michael, how are you?
I was all right, and then I got Victor Meldrew hosting the space this morning. I mean, you're
Uh,
making me sound cheerful, Ryan.
do you know what? Talk about taking the edge off your holiday. It's bloody horrible here.
It's not that bad.
Yeah, it's not. It's just, to be honest, I'm just more pissed off waking up feeling like shit because there was a guy next to us sitting down and he was coughing and spluttering all the fucking way home. And yeah, I feel like shit now. So great. So I'm going to be a barrel of laughs on the train back to Kent in a minute after I finish the call with you. But anyway, no one wants to hear about me moaning about after a week away with my gorgeous girlfriend who's sitting next to me, who's kind of rolling her eyes. What is going on in markets, my dear friend?
Well, when you finish the sycophancy, can you give me a disclaimer so I can actually crack
Oh
on?
yeah, better do. Nothing discussed on this space session constitute trading or investment advice when first any kind of endorsement by PIQ, myself, Ryan Paisley, or indeed Mr. Michael Brown.
There we go. That's better. And a very good morning to Zach as well, who I can see listening in.
Yes,
Hopefully
at
on
the
at
airport.
least his second Guinness by now.
Airport pints for Zach.
Indeed. Right, where are we this morning? Well, it was a bit of a slow one once again yesterday, although that really only applies outside of the equity complex, where we saw a bit of a tech-led sell-off. The Nasdaq down by about 1.5% on the day, the S&P down by about 0.5%. They were the biggest daily declines for both of those indices since the start of the month, which is, of course, when we had that rather dismal July jobs report release, but it was very much a case of sort of two markets yesterday. We had tech very much on the back foot, all of the mega cap names lower, pretty much anything related to tech or crypto taking a bit of a battering, but everything else kind of holding up all right. And actually, if you dig into the details, well over half of the S&P 500 ended the day in the green. So, of course, plenty of people have been asking questions as to why did tech sell off. Frankly, I don't think anyone's been able to pin a precise reason on things. I mean, you've got to consider that a lot of these stocks are up 40, 50 more
Yeah,
percent
exactly.
since from the bottom in April. So a little bit of wind coming out of their sails is not necessarily a bad thing. You've also had a slight souring in terms of the news flow in the tech space recently. Obviously, the Trump admin wanting to take over 10% of
Yeah.
Intel. Also, this whole kind of quid pro quo thing around Nvidia and AMD potentially having to give up a proportion of their revenue. There was also, I saw someone flagging, actually it was Lintz at News Squawk flagging this morning, apparently the MIT University in the US had put out some paper basically saying no one's actually managed to gain much in terms of productivity or a return on all their investment in AI yet. That one feels like a little bit of a stretch, to be completely honest with you. But whatever the reason, it was far from the catastrophic move lower that some people would have you believe if you look at
Yeah,
what the financial media have
absolutely.
been saying. And actually, futures are as near as makes no difference flat this morning. So
Well, and this is
very
a
much a case of bit buyers coming out, I think. Go on.
Sorry, yeah, exactly that. This is very much things that people need to be aware of. Markets can't go up every day without some kind of pullback.
No, no,
Weak,
absolutely not.
you get weak length forming in markets. There is a strong argument, an argument that I back, that it's actually healthy for a market to pull back occasionally, because otherwise you just get far too overextended, weak length in the market, and when we do get a flush, it'll be a terrible, terrible day. So these kind of moves, these pullbacks, these redresses, on the back of seemingly nothing, are part and parcel of market dynamics. And
Hmm.
one thing you highlighted at the start of that, which was really good, was the breadth of the S&P was actually very good. And we get normally the same talking heads that tell us the world's ending because Nvidia's off a couple of percent are the ones that are then screaming also the breadth is shit, therefore the world's going to end as
Yeah.
well. Well, Yeah, well, there's no bad breath today.
No, and you really can't have it both ways.
No, exactly. They
Also, the
try.
other
They
thing.
do try.
Yeah, well, yeah, of course. The other thing I would say, just lastly, before we move on this one, is volumes were pretty light as well. Even for summer, volumes on the S&P yesterday were about between 7 and 10% below their 20-day moving average. So again, you've got all of these stocks that have come a very
Yeah.
long way in a short space of time that start to roll over in a market where no one's really trading, and that just exacerbates the downside that we see. But
Well,
it is important. Go on.
so just final point on this, because I think this is exactly right. But also, yeah, we were saying yesterday. Was it yesterday? No, day before. Whatever day it was. Yesterday. God, my holidays completely fucked my brain up. When was it we were saying about the PE ratio for
Oh,
Palantir?
Palantir is about 600 or whatever,
Yeah,
yeah.
you can't be screaming that this is madness, this can't go on when that, or based on that PE ratio. Then also scream this is madness, this can't go on when it comes off. You know,
Yeah, exactly.
you know what I mean? It's like you said before, people are trying to have it both ways. And you
Mm.
know, unfortunately, markets don't work like that.
Well, I'm happy to report actually that the stock is now much more fairly valued. It was down 10% yesterday. The PE has come into 524,
Oh,
which feels
bargain,
much
bargain,
more
snap it
reasonable.
up, snap it
Yeah,
up.
value investors will be straight in on that one, I'm sure. Um, anyway, moving on from that, as I said, the risk aversion was very much contained in the equity space. There was pretty much nothing going on elsewhere. Very range-bound trade in the treasury complex and in the foreign exchange space, with gold continuing to move sideways as well. In terms of fundamental developments, there were a few to get through from yesterday and also overnight. On the trade front, we did hear from Commerce Secretary Howard Lutnick yesterday. He was speaking on CNBC saying that they are, quote, weeks away from publishing the texts of trade deals that have been agreed recently. So I guess in the meantime, all we've got is kind of just trust and a few Trump Truth Social posts. I know
90%
in
done.
particular, this is irking the Japanese. Without wanting to be too stereotypical, this is a completely alien way of working to folk in Tokyo. As we all know, they want things very orderly and written down and all neat and tidy. The fact that the Trump administration has just kind of gone, nah, you'll get a 15% tariff on autos, just trust us on that one. I don't think that's going down too well with the Japanese administration. Also on trade, we had news from Apple yesterday, Bloomberg citing sources that Apple is continuing to build out its iPhone production in India. Of course, this is as the company continues to try and get around effectively US tariffs. All four iPhone 17 models are going to be produced in India ahead of the phone debuting next month. This is actually the first time that Apple have done that and built all four models in India. Of course, they are continuing to try and lessen their reliance on production in China, but weirdly, by doing that, they've actually ended up investing in a country that is now subject to higher tariffs than the one that they were trying to leave, which, of course, Apple do have a carve-out from that because of their pledges to invest in the United States, but nonetheless, I think it just speaks to the sort of
Yeah.
broad degree of uncertainty and just chaos on the trade policy front. Moving away from trade, we did hear from the Treasury Secretary as well yesterday, Scott Bessent. He was talking on CNBC as well, I believe it was, saying that he will be meeting with the 11 Fed chair candidates both before and after Labour Day. Labour Day is, of course, the 1st of September, for those who are unaware. Once he has spoken to them and interviewed them, he will then present his findings to President Trump, who will obviously conduct the final round of interviews and then provide a name as to who is going to get Powell's job. On the subject of Fed chair, we are due to hear from Chief Market Strategist at Jefferies, David Zervos. He is obviously one of those 11 names. He's due to be on CNBC at 12:30 today, so potentially one to keep an eye on. On the subject of Jerome Powell, President Trump was ranting away about him yesterday. I will read out what he posted on Truth Social. He said, and I quote, "Could somebody please inform Jerome too late Powell that he is hurting the housing industry very badly. People can't get a mortgage because of him. There is no inflation and every sign is pointing to a major rate cut. Too late is a disaster." I mean, I'm not entirely sure where you start with that one, to be honest with you. I think The reason the housing industry is fucked is because no one's building houses. The reason people can't get a mortgage isn't because of Powell, it's because of where the 30-year Treasury is trading, which is mainly a result of Besant and Trump not getting a grip on the deficit. There clearly is inflation because core
Yeah,
CPI rose north of 3% last week and PPI getting close towards 4%. And he says every sign is pointing to a major rate cut, but then in the next breath, Trump's ranting away about how it's the best economy ever and it's 10 times better than it was when
this is
Biden was
it.
in charge. You
This is
can't
it.
have the best economy in the world screaming for a rate cut. It doesn't work like that.
It's just kind of belying the fact that Harty is still a real estate developer.
Yeah, exactly that. Exactly that. And, thankfully the Fed continuing to ignore all of this nonsense. But, as and when Trump gets his own man in the chair, then
Well,
that may be a
quite,
slightly different
quite.
story. Sticking with the Fed, we did hear from Fed Governor Bowman yesterday. She was on Bloomberg, very much an interview that was focused on financial stability and regulation, which is, of course, part of her role as vice chair for supervision. But Bowman was asked about her view on the economy and on policy and simply said that she has not changed her views since the July meeting. At that July meeting, of course, Bowman voted in favour, or dissented, I should say, in favour of a 25 basis point rate cut, along with Governor Chris Waller. In terms of data out of the States yesterday, rather topically, we did get some data on the housing market yesterday. Housing starts coming in at 1.43 million in July, up from a prior 1.32 million, and actually rising to a 5-month high. So, Mr. Trump, no one can get a house, but housing starts are at a 5-month high. So again, riddle me that one, you orange moron. We also had the latest building permit stats out yesterday, which came in pretty much in line with expectations, if not a touch softer, and the latest inflation data out of Canada, which was a touch softer than expected. CPI rising by 1.7% on the year in July, down from a prior 1.9%, although core CPI, that remained unchanged at 3.1%. So odds on the Bank of Canada doing anything in September were relatively little changed. In terms of other bits and bobs, in the AI space, a couple of headlines. OpenAI, apparently they're in talks, according to the New York Times, around an investment deal that would value the company at $500 billion. Sticking with AI, Meta, who have been on a massive hiring spree recently, apparently they're now going to downsize their AI division, and some executives are expected to leave. This is also according to the New York Times. I would imagine that this is probably because someone at Meta's gone, oh shit, we've just offered people 9-figure salaries. How on earth are we going to pay for this? As for other things to mention, just a few bits and bobs from overnight. Firstly, the RBNZ delivering a very dovish policy decision, lowering the cash rate by 25 basis points to 3% as expected. But the vote was much more dovish than expected, with two policymakers dissenting in favour of a larger 50 basis point rate cut. And the policy guidance was also relatively dovish, with the RBNZ noting that they expect to lower rates further if inflation continues to ease in line with their projections. The RBNZ, of course, incidentally, have two further meetings this year. We've also heard from the Riksbank this morning, who kept policy unchanged at 2% as expected. They also, in their guidance, noted that they still see, and I quote, some probability of one further rate cut this year. And last but by no means least, I'll turn to the UK, where we have had two rather shambolic events over the last 24 hours. The first is this morning's inflation figures, where headline CPI rose by 3.8% on a year-on-year basis in July. That was bang in line with the Bank of England's forecast, but nonetheless it is the highest level since January of 2024. And of course the bank expecting headline inflation to rise towards and if not above 4% by September. Underlying price metrics, they also rose. Core CPI up to 3.8%, which is the fastest rate since April. Services CPI, that is back at 5%, well above the 4.8% consensus, and also its fastest pace since April of this year. Clearly, inflation in the UK remaining far too high and also moving in the wrong direction. There's been a lot of consternation on the internet this morning about how this was all driven by airfares, and if you take out, the line is, if you take out all the bits where prices are rising, there's no inflation. Well, I mean, this is ridiculous. Nicholas, one of the biggest
Yep.
upward influences on inflation in the UK is food prices. Everyone's got to eat,
Yeah.
right?
And
You know,
utilities.
and utilities and fuel and things like that. The cold hard facts of the matter are prices are rising at a rapid rate here in the UK, and the BOE are arguably. Well, I mean, I was going to say they're behind the curve. They can't even see the bloody curve at this point.
Well, and not only that, but then the policymakers are quite happily to put on social media. I'm looking at Angela Rayner. If you're listening, you're a dozy bint, telling us that cost of living's falling and stuff. No, it's fucking not.
Or she actually said that?
Yeah, well, she was saying it last week or the week before. It's like, we're
God.
putting more money in public's pockets. Cost of living's coming down. It's quite
It's
clearly
not.
not.
It
It's
really
not.
isn't.
It's not.
I mean, there's literally nothing in that data
Do you know
that
what?
points to the cost of living coming down.
Why the fuck have I come back from being in Croatia where I was paying £5 for a mimosa to be paying? Oh fuck! Right, I'm getting on the plane. I'm fucking out this small town shithole. I'm off. I'm
Well,
going to a
before
big
you do
city.
that, let me cover the second
Sorry. Oh
shambles that
yeah.
panned
Go
out
on.
here in the UK yesterday,
Go
because you'll recall the long-running saga of a certain government department in Newport, South Wales, the Office for National
on.
Statistics. They announced yesterday that the retail sales report, the July retail sales data that was due to be published this Friday, it's not going to be. It's now going to be published on the 5th of September instead. The ONS say that this is to allow for, and I quote, further data quality assurance to take place. To translate that into a language people can understand, they've basically fucked it up and now need to undo all of the errors that they've made. Just to recap, for those who may not have been paying attention to this saga, which has now been going on for about 2.5 years, the ONS in that period have now made an absolute mess of the labour market numbers here in the UK. Inflation, CPI was wrong, and actually there were some errors in the CPI basket today. PPI, producer prices, is so wrong that they're still not publishing it. They've also buggered up the trade stats, which by extension means that the GDP data is probably wrong. There's also various issues with other data subsets in terms of things like household wealth and population growth and all that kind of thing. And now retail sales is the latest one to add to this list. That in itself is, quite frankly, scandalous. I think the bigger issue for me is I'm almost now at the point where we need to say, I'm not sure you can actually trust anything that the ONS are
Yep.
putting out, because these are the errors that they know about. These are the ones that they've admitted to publicly. How many more data sets do they have? The answer is probably in the millions in terms of the total number of data sets they maintain. How many other errors are in those data sets
Yep.
that the statistical boffins haven't actually even managed to figure out yet? I think that's my bigger
Yep.
concern. And actually on this, and it's rare for me to do this, but I will cut a tiny, tiny little bit of slack for both the Bank of England and the Treasury, because their jobs are hard enough as it is. They're doing them very badly, I will admit. Their jobs are hard enough as they are. Trying to do those jobs without any sort of accurate economic data is almost impossible. Frankly, I think there should be a hell of a lot more outrage about this than there is. But there we go. Maybe we can start a one-man campaign.
Two man. I'm here.
Two-man campaign. There we go.
The Office of National Shambles. There you go.
There
We're
we
off to
go.
a runner. And no
Lovely.
swears in that either. I'm quite impressed with myself. Yeah, you're absolutely right, Mr. Michael. And we haven't even mentioned this new potential capital gains tax on selling your house, which that's been throwing up a little bit of confusion. But anyway,
I feel like that one is a trial balloon. At least I hope so. I mean,
bloody
trying to
better be.
charge someone, what was it? I think the highest rate would be 24% of the sale
Yeah.
value. It's just ludicrous.
Yeah, exactly. I'll tell you what as well. So this is something I know we're completely digressing when, we're almost close to running out of time. But to be honest, as Zach's not done the overnight news roundup, overnight news headlines, I'm going to be struggling to find headlines because I'm in no fit state this morning and last night to be keeping an eye on them. So one thing I did want to mention is we've said in the past about who the fuck's taking these like Ipsos polls and stuff like this, right? I said, I think it was last week or the week before, I said, do you know what? I've never once been even called up and asked to give my opinions on anything. Well, lo and behold, whilst I was sat there last week with a mimosa in hand, a phone number from Belfast kicks off, and I'm like, oh, bloody hell, I better answer that. It was some lady from the Ipsos survey centre thing, and I was like, do you know what? I'm for my Moses in. Yes, I do want to have a bit of a feedback with
Oh
you lot.
no.
Um, but I said, oh, how long is this going to take? Half an hour.
Oh
I was like, do you know
Jesus.
what? I was
No
like, do you
one's
know
doing
what?
that, are
This
they?
is the first time someone's asked me to do it. I say normally to the two people that listen to me that who the fuck's got time to do this? And now I'm convinced that the only people that are giving information to
Jesus.
these polls have nothing else in their life worth doing. So
Yeah, I mean,
why are
I
we
don't
even
want to.
why are we even listening to them? They're
I was going to say,
complete bollocks.
I don't really want to generalise, but I would imagine that the only people who would actually have
Stop
half an
it!
hour to
Stop it!
spare
Stop
are
it!
going to
Stop it!
be
Stop it!
either
Stop
retired
it!
or unemployed.
Well, oh, you're being far more polite than I thought you were going
Right?
to be.
Yeah, no, but literally, if you're, and that is not going to give you a representative sample of the
No,
population because,
no, exactly
to
that.
use that example, if someone rings a quote unquote working person during the day, well, they're at work. If you ring them in the evening, no, fuck off. I've had a hard day at work. I want to chill
Yeah.
out with a beer or watch Netflix or whatever.
I genuinely thought these things took 5 minutes. But when she told me she said on average 30 minutes, it could take longer depending on your answers. I was like, I'm really sorry, darling, but yeah, jog on. But yeah,
Ah,
anyway, let me read through a few headlines that I've managed to dig out as Zach's not here before
this
you
won't
just give you
take
a
long.
quick rundown. Won't take long at all. Obviously, thankfully, we've covered most of the things that are on here. US budget deficit, that's forecast to be $1 trillion higher over the next decade. That's according to the CBO, highlighting the growing strain on treasury markets and long-term US borrowing. Japan's exports, they logged the biggest drop in 4 years as US tariff impacts intensify. The slump underscores how trade tensions are weighing heavily on Japanese manufacturers, obviously being a bit of a ball ache for the Bank of Japan as well. China, they leave the benchmark lending rate unchanged, matching forecasts. Beijing kept policy steady, balancing the need for growth and concerns over capital outflows. Geopolitical news, Putin, Modi, they're to meet in Delhi by the end of the year. That's according to Russian embassy officials. The meeting could strengthen energy and defence ties between Moscow and New Delhi. Obviously one to watch to see how Trump reacts to that. Trump says that US may provide air support to back Ukraine peace deal. He stressed no ground troops, but suggested Washington might back negotiations from the air. Oil was little changed as investors await the next step on Ukraine peace talks, yada, yada, yada.
Well, the other one
Ukraine
on
attack. Go on.
I was going to say the other one on Putin is I think it was the AFP reporting yesterday that his initial proposal to Trump was yes, I'll meet Zelensky in Moscow, as if that's what's going to happen, pal.
Good luck. I'll take the unders on minutes
Yeah,
Zelensky lasts. Ukrainian attack. The Ukrainians attack cuts power in Russian-controlled Zaporizhzhia, if they
good,
pronounce that.
right.
The strike added to the instability in Europe's largest nuclear power plant zone. Um, Sticking with that kind of region, the US NATO planners start to craft Ukraine's security guarantee options. Allies are quietly sketching out frameworks for long-term defense commitments. As a reminder, a red line for Putin is no NATO involved whatsoever. So this seems to be a bit of a dead duck from the outset. The US is to hold more than 30 offshore oil and gas auctions through 2040. That's as Washington signalled a long-term energy supply push despite climate debates. Some equity and corporate news. Obviously, we've covered the tech sell-off. Obviously, big names being dragging Wall Street lower, but sparking a defensive rotation. That's according to the Wall Street Journal. What else we got here? The US is examining its equity stakes in chip makers other than Intel. Obviously, we know the Intel name's been bandied around already. This is all related to the CHIPS Act, the cash grants that the Biden administration were funneling over. See how Trump takes over ownership of that in terms of the staking. Michael gave us some data yesterday saying that they would actually be Intel's biggest shareholder if they did take the 10% that's being mooted. So definitely want to keep an eye on. Databricks, they eye over $100 billion valuation as investors back AI growth plans. The AI-focused firm is pushing towards one of the highest valuations in private markets. Vantage Data Centers, they plan 25 billion AI campus in Texas. It's among the largest bets yet on AI infrastructure in the US. Ancora, they urge the CSX to pursue merger or replace the CEO amid a rail industry shake-up. Finally, from me, because it's got Tom in the name and Tom's normally listening, exclusive from Reuters, Tom's Capital seeks CXS meeting to buy the stake. Again, we seem to be hearing quite a bit about railroad mergers in the US over the past month or so. So definitely want to keep an eye on. I know Berkshire Hathaway and that have obviously got big stakes and are quite nimble in that market. So that will definitely get the headlines rolling. And that's it for me before I choke my guts up after whatever I've caught from the plane ride.
Thanks for that. Right, well, I'll make this nice and short and sweet then. In that case, in
Thank you.
terms of,
Look, just
go
like me.
Sure, yes. In terms of today then, we a few things on the data docket. At 10 o'clock this morning, we have the latest inflation numbers out of the Eurozone. This is final data for July though, so it's unlikely to be particularly market moving, and the headline metric that is seen unrevised at 2% on an annual basis. In terms of other oh dear, bloody hell, whatever you've got is
You're
catching,
right.
right? In terms of other scheduled events
Can't
today,
catch it twice.
at 6 o'clock this evening, we've got a 20-year bond auction in the United States, $16.16 billion worth being sold off. Usual reminder that the 20-year, that is by far and away the most unloved segment of the Treasury curve, so don't panic over all the scaremongering headlines if that auction comes in a little bit soft. Basically, it's stuff that nobody wants anyway. And then at 7 o'clock this evening, we have minutes from the July FOMC meeting. Of course, at the July meeting, the FOMC holding the target range for the Fed funds rate steady between 4.25% and 4.5%. Although, as alluded to earlier on, we did have Governors Bowman and Waller both dissenting in favour of a 25 basis point rate reduction. They have both outlined their case for that dissent in many remarks since, so I think there's unlikely to be much by way of surprise in those minutes. Money markets pricing around an 80% chance that the Fed do deliver a 25 basis point cut at their September meeting, with the curve also discounting a total of 55 basis points worth of easing by the end of this year. Of course, the main driver for Fed expectations from here is not going to be anything in those minutes. It is instead going to be what Jay Powell has to say when he speaks at Jackson Hole on Friday, 3 o'clock Friday afternoon here in London, 10 o'clock in the morning on the east coast of the States. In terms of other bits and bobs, we are due to hear from the Fed's Bostic and Bowman today, along with ECB President Lagarde. In fact, I think Lagarde's been speaking while we've been talking, Ryan, although I don't think she said anything of particular interest. And then overnight, we're due to hear from the RBNZ Governor Hawkesby, that he will be testifying to Parliament after that very dovish policy decision in the early hours of today. In fact, Hawkesby, I think we should call him Dovesby at this point. And last, but by no means least, notable earnings today come from Target before the market open, and that continues retail earnings. Home Depot, not Depot, Depot, they were a little bit soft yesterday, and Walmart, they report before the market open tomorrow. And of course, usual standing reminder around any potential geopolitical or trade headlines in the mix as well.
Wonderful. Thank you very much, Mr. Michael Brown. Complete normal resumption of service will begin tomorrow. Obviously, I will sort out some headlines as Zach is on holiday. Myself and Cam will be talking crypto markets today at 3 p.m. And obviously myself and Angie will be talking at 2:15. In the meantime, whatever you're doing, please keep it tight, stay safe. And if anyone sees a tanned yet fairly short lad looking very distressed and depressed at Victoria Station in the next half hour or so, to come and say hi to me, because it'd be me weighing up my life choices. Michael, thank you so much as always, my dear friend. Listeners, thank you so much. We'll see you all tomorrow. Much love.
Bye for now.